Welcome to the Festival of Entrepreneurs, recorded live at the NEC in Birmingham. Over the next few minutes, you'll hear from some of the most incredible founders, investors, and business leaders who joined us this year.
Hello everybody, welcome back to the Festival of Entrepreneurs. Welcome to this session. We're going to talk about how to get investor ready. I have two people with me today who are going to explain exactly how to get investor ready. They are old hands, they are extraordinarily experienced, they are, of course, the co-founders of Swoop. Will you please welcome Andrea Reynolds and Kieran Burke?
Thanks, Ian.
Ian?
You're on.
I'm on.
Yes, so let's talk a little bit about Swoop. So you've gone through your own journey of finding investors for Swoop. So Swoop was founded in 2018. How has the journey, very quickly, how have you brought investors on board to help grow this company?
Yeah, I would say Swoop is a case study of our entire business. Our business is about give us your data once, and in one fell swoop, you will see every form of funding available to your business in real time, depending on how your business is changing. And so I always say to everybody, your funding journey for your business is really not pretty, right? It's never pretty, and I call it the patchwork quilt. Like, you're literally piecing together funding as you go. But Swoop started because we built our prototype and won investment, actually from Ireland, from Enterprise Ireland. And so that's the other thing I would say is don't just think about funding within your own domestic market. You can get funding globally now. So started with Enterprise. I'll give you the quick patchwork quilt of Swoop investment funding. I won't bother with the other side of it, and then we can speak into it. But started with Enterprise Ireland. We matched that up with SEIS investors. And then COVID hit, and it was kind of great because we were raising in the US at our kitchen tables, and we did our Series A while sitting around our kitchen tables. So we managed to get funding from venture funds in the US and the Middle East. And I don't think we would have got that without flying there and doing our pitches if it wasn't COVID. And then we followed on with our final round last year with another VC from the US. And we're closing what we would call a convertible loan note now, because we're at a real major inflection point with Swoop, and we didn't want to dilute further. So we've just closed that with our current investors. So it's been government agencies, SEIS investors, VCs, and now convertible loan note.
So Kieran, I'll just read you the subtitle of this event, which is what to do next if investors say no. So presumably, while you're throwing together that patchwork quilt, investors have said no.
Yeah.
And what's your response been?
Yeah, absolutely. I think, and particularly for business owners in the earliest stages, that's when you're going to get the most amount of no's. But it's also probably when you have the most amount of time. And I think one thing that we did at the beginning, which I think was a good strategy and other business owners can maybe follow suit, is not think about just one type of financing. So when we started off, as Andrea rightly pointed out, we were able to go to a government agency, Enterprise Ireland, and secure funding. What we also did was look out and see, okay, where else can we get funding? So in the UK, there's a fantastic scheme called the Startup Loan Scheme. You can get access to up to £25,000 per director in a business spread over 5 years at a 6% interest rate. That's incredibly affordable when you spread it out over those monthly installments if you're looking to build a prototype, an MVP, do a stock run. So that gives you liquidity, and it's expedited and it's quick. The other category that people are kind of often intimidated by is grants or competitions. And again, thinking, because we ran a grant session yesterday, and I kind of think about it, we were fortuitous at the time because we had more time to be able to look and explore and see what was on the market. Sometimes the issue when you get into the weeds of being operational and trading and have lots of customers and things like that is you're on that bloody hamster wheel and you can't take your head out from a moment to breathe. But when you're starting out, it's super important to take the time to research and see what's on offer. And yes, it was incredibly fortuitous that the competitions came about when they did, but I'm sure today if you look around and see what's out there. So for us, we looked at an innovation agency called Nesta in the UK. They had a collaboration with the regulator, the Competition Market Authority, and we went and entered a competition, and we won 350,000 through that. We then saw another competition run by the Banking Commission's Remedies Fund, which was money set aside by NatWest, and we got 7.5 million through that. But again, it was take your time out, see what's available to you. Small example of that is I'm a business, I want to go into technology, I have to host, I have to spend money on expensive servers. Well, every single one of those server owners, whether it's AWS, whether it's Azure or GCP, they offer amazing freebies. So we got $250,000 free from Microsoft. So that's not a rare thing. Anyone can do that if you've got a tech-driven business that's going to be hosting. So you just need to have eyes wide up at the beginning and see what options are available to you.
Okay. I will come back to you with more questions, but I do have a question for the audience first of all. So if you could all put your hands up for me. If you could all put your hands up, put your hands up. See, I do this so that everybody is invested from the gate. I need to see your hand up. I need to see your hand up. Thank you very much. And keep your hand up. Keep your hand up if you've ever been turned down by an investor. Keep your hand up if you've ever been turned down by an investor. Okay, so quite a few people have been turned down. Actually, put your hands up again, because I've got a follow-up question. Okay, and the follow-up question is, has a fear of the word no held you back from asking for investment in the first place? Right, okay, that's telling. So, what was your response to that, Andrea?
No is part of the game.
Yes.
Airbnb got thousands of no's. It's like everyone gets no's. It's just a volume game. But what you do is you start off with the ones that you think they're, I don't care whether they say no. And you practice everything in front of them. You get the feedback from them. You hear how they talk about your business and why they're saying no, and then you take that and you change your deck and you change your conversation for the next one. So you use the first few to just go, I don't care. They say no, I'm good with that. All you do is you say is, what have I gotten from that makes my business better the next time I go in front of someone? And I had one recently. The best time actually also to speak to investors when you don't need the funding. And I had one from the US, this big IAM VC gets on the phone with me, and I was like, I have no interest. We're not looking for funding. I was like, I have a half an hour. I went on, I did the half an hour, and he was like, oh, no. And I was like, what? And he goes, clearly you've been doing this a while because you have this down. He was like, oh, that was so good. You have this down. You've nailed every point. And that's what I would say. So use it as like, don't be emotional about it. Like, just see it as you're in a game. These people are going to say no the majority of the time, but you should get something out of it yourself. And you should ask them that question. I want your feedback. Why did you say no? What was it about my pitch? So just, you really can't care about it as much. Like, we're all invested to get our businesses off the ground. But as Kieran said, there's two, if I was to say, give you two words in terms of going for investment. The first is optionality. You have to have hundreds of options on the go. Never, ever take an investor at their word when they say we're investing. Like, you might think, oh, my job is done here, they're investing. No. Until the cash is in the bank, you do not have an investor. So you need to have at least 5, 6 others on the go, and you need to be telling that investor, well, I'm still keeping my round open, I'm still talking to these guys, to speed them up, right? Because the number of times they walk away, it's criminal.
What
Kieran,
Andrea is
referencing,
what Andrea is referencing there is the dark winter of November 2021, while we were waiting. Oh yeah, it's coming tomorrow. It was a bleak couple of 30 days or so.
It was a bleak moment, but we had applied for a grant. We had applied for other funding.
Yeah.
We were out.
And it was a grant that saved us.
So never, ever rely on anyone that tells you that.
Okay.
And sorry, my second one is,
okay.
The only, if there was one thing that a VC is looking for, it's traction and momentum, right? So sometimes you got to fake it to make it, build your traction and your momentum, right? So like if you know I've got some great sales coming through, but geez, 6 months time, I'm not quite sure. Get out the door now and show them that growth, because the valuation of your business significantly goes up with the momentum that you show as well.
Okay, so that's what they want to say yes. Kieran, what is causing investors to say no to a business?
Well, I think one of the things is what Andrea touched on there. If they don't see that kind of growth element, particularly, so you've different types of investors. I think that's important for business owners to understand, because sometimes they're like, oh, I'm going for equity. Well, how a VC fund versus an SEIS fund versus a PE fund, they'll look at your business very, very differently. So I think we talked about it again yesterday in the grants thing about eligibility rules. If you're going to go and meet an investor, and then this sounds a bit bad, they're probably not going to do any research on you. They're not going to do anything on you. They're going to give you like 10, 15 minutes and you've kind of wow them. But what you kind of need to do is do a hell of a lot more research on them, because they will have a specific thesis. They will have portfolio businesses. They will have a strategy of how they want to deploy their money. So you kind of have to see, does this fit my model? Am I growing? Am I in the sector they want? Am I doing the thematics? So if you're not doing that, it's going to be hard to get the no. The other side of why they say no is if you're not what we say investor ready. What we mean by that is you need to have these numbers and these documents to hand. If you can't talk in their vernacular or their language, again, this sounds a bit harsh, but they really do not care anything about you at the beginning. Like, what is their reason to care? They're purely doing this to make money. So in order for them to get in the room, to actually want to get to know you, actually want to like you, you kind of have to speak their language. You have to talk about the numbers that they're interested in. How much does it cost to acquire a business? How much are you making off that user? Are they returning? Are they coming back? What are your channels? There's multiple channels. So if you can't answer those things, you're not ever going to get a yes.
Okay, I'm thinking as you speak about the publishing business, because I do know a couple of authors who, the most successful authors I know are the ones that treat their books like a business. And bizarrely, I said to this one woman, she got a rejection, and the feedback she got was, you've got to write it in first person present tense. The story didn't change, the characters didn't change, the book design didn't change. The only thing that changed was the grammar. And it was fascinating. I thought, and by taking that feedback and turning it into something that made it more saleable, lo and behold, made it more saleable. How do you respond to feedback like that, Andrea?
I expect it.
Yeah.
So, and just on Kieran's point, like there's never been an easier time to go in front of any investor. You just go to ChatGPT and you say, I'm about to go meet this fund and this person at this fund. Here's my deck. Tell me how I should speak with this person. And they'll come back and they'll go, well, they've invested in this, that's similar to your business. So you literally can prepare yourself much easier today than like when we started out. I do that today. I speak to VCs, probably speak to about 6 a month. We're not raising, but you want to start relationships with them, and you want to. That's what I do. I just
Yeah,
5 seconds
it was a
before.
godsend. We do this thing with Deloitte where they kind of introduce you to different investors or doing thematics. So I was doing one with private equity in Dallas, but it was a full day of you're meeting 12 meetings in one day. And ChatGPT was amazing. It was just like, okay, here are the 12 people, critique my business, what are they going to want about, here's their thematic, like what do I need to be hitting on? And it made such a difference because you had like 1 or 2 things you just focused in straight away, and you could see, oh, you're reacting to what they want to hear.
So obviously you changed the pitch, but did you ever change the business based on feedback?
No, it was more never changing the business, but it's relative to them, because sometimes it's hard for them to get, they're seeing so many decks, so many businesses. So what they are familiar is their own fund, the reasons why they invest. So if you talk to them, open them up first, then they're going to have more of an understanding of why you're relevant. That was kind of more the strategy, not necessarily changing our business.
Okay. Andrea, do you want to add anything on to that?
You know, I guess just one thing to say to anyone going for funding, especially in the UK, it is like the seed enterprise investment scheme is genuinely one of your best places to start. But the second one is, especially if you're not based in London, if you're regional, the British Business Bank has co-funded investment funds within regions, and they have to deploy those funds within that region. So I always think, who am I competing against for these pounds? You're only competing against businesses within your region when you go to that fund. So if you're a good business and you're within that region, you've a much higher chance of getting funded than, say, going to VCs who have no sort of stipulation on where they can invest. So I would say start with SEIS, EIS, British Business Bank funds, and I wouldn't be going to a VC early on unless you're happy to be on that treadmill, because careful what you wish for with VCs as well. They can send your businesses in a completely different direction. So starting with the earlier in angel investment funds, British Business Bank funds is always a good idea.
Okay, I am going to come to you for questions very shortly, because this is a very good opportunity to ask some genuine experts on getting investor ready about how to get investor ready. But before we do, I just wonder if you have any examples of a business that has come back stronger after initial no. Present company.
Yeah, I mean, like, I think countless examples, and also what Andrea just touched on businesses that were kind of fixated on getting those VC metrics. So I think two buddies of mine that are doing extraordinary things right now, and they're scaling their business. So they're in the kind of men's health, hair loss, vitamin space. Would have really gone at it a lot at the beginning in terms of those traditional VC type models. Spend a bit of time on that. They kind of then went down more of the angel-driven approach. Brought in subject matters experts at a board level that really understood their business. That allowed them to be a bit more patient. They were then able to think in terms of alternative finance, not always thinking about equity funding. Use that alternative finance to really cash flow their business, to constantly give them growth, which constantly didn't make them out there trying to find investors. Lo and behold, 3 or 4 years later, they're now in a way better position where traditional VCs are now all over them wanting to speak to them because they've had this mega growth. They're doing tens of millions in turnover, but it was a perfect example of lots of no's at the beginning, but changing their approach about the type of funding and where to go for the funding has really helped them grow as a business and put them in fantastic shape now today.
Any good examples from your side, Andrea?
No, I would just say, but the point that he's iterating there is, what we're trying to say is, don't think to yourself, oh, I'm going for equity investment. It's just, I need to fund to get to this next milestone.
Sure.
And then lay out what your options are. And you need to have a number of them on the go, because those guys, they were in a really bad place at one point, and a great business, just they were talking to the wrong people at the wrong time. And it was the cash flow facilities Swoop put in place for them that just allowed them to keep growing while they were having those conversations. So I would say just think about, the other thing as well is, you always say to people, like, how much do you need to raise? So people always go, 150,000 or 200,000. It's like, have you really thought that through? Do you? And you break it down and you say, well, you need this for this milestone. Well, would you not get your startup loan? Like, we paid for our prototype with a startup loan, then put that into the competition that got us the next phase. So it's like, just break down why 150, and could you wait on getting that 150 by doing a few more milestones before that? So just think about, funding equals getting to the next milestone, which makes me more investable or more creditworthy. How do I take that next step? That's the way I look at it.
Which brings us up to time. If you would like to find out more about Swoop, I think you're around for the rest of the day, aren't you? The Swoop stand is just straight out there. Turn immediately right, and they're on the back corner. And Andrea or Kieran or one of the team will be delighted to talk to you about anything, any questions you have around funding. Will you please thank my panel, the Lady Gaga and Bruce Springsteen of funding. Kieran and Andrea.
Thanks, Ian.
Thanks for watching this special episode from the Festival of Entrepreneurs. Our mission is simple: to help founders and business owners grow faster, think bigger, and take action. And if you were part of the event, thank you for joining us and being part of the community. And if you missed it, don't worry. We'll be back with even more ideas, inspiration, and opportunities to help you take your business to the next level. You can find out more and register for future events at festivalofentrepreneurs.co.uk.